Right, next off, Genesis trading halt. Genesis are back in the news. I think there was some discussion. I wonder how it's going to go, this deal, if it's St Barbary were continuing to decline in their share price. They've just put an announcement out. They've both gone into trading halts, and the deal is going to be modified, you would say. Genesis have actually released an announcement and St Barb's on the modifications and the reasoning. Let's unpack it, lads. It's a very interesting one.
This is super interesting. You don't often see deals recut at this stage, and I think it just sort of speaks to some of the the events that are unfolding in relation to kind of the advancing of the mine plan that's happening at Leonora. So both Genesis and St Barbara, they've entered this trading halt. And St Barb's in their announcement have flagged that one of the conditions precedent of the scheme is that their net debt must not exceed $163 million by the month before the second court hearing of the scheme. Now, and we still don't know when that second court hearing date will be because the scheme booklets are not out. They've been pushed back 2 months already. So, they've flagged that their net debt at the end of 31 March was 112 million. And I think the gist of this announcement is ultimately to flag to the market that there might be some further capital requirements given the high costs experienced at Gwalia. And when you look at the announcement, they've actually withdrawn the all-in sustaining cost guidance estimates for production, at Gwalia, their Leonora operation in FY23. So it looks like they're going to need more capital to avoid a potential breach of that net debt threshold condition, because the mining costs experienced at Gwalia and hence a likely recut of the deal to protect the Genesis shareholders for unforeseen downside as a result of that.
Yeah, I think it's hard to imagine that a new deal here would be any better for St Barbara shareholders.